welcome to our week ahead. Just a quick recap on where we've been. We saw markets coming in for a bit of volatility over the last week, mainly due to earnings. Big tech earnings in particular came in the spotlight with the likes of Meta, Alphabet, Microsoft and Amazon all struggling for traction as their earnings reports missed expectations. The one bright spot being Apple. Despite slightly soft iPhone sales, it still managed to beat on earnings per share. So we saw a fair bit of movement in the indices on that. We also got that narrative about the Fed pivot driving a lot of the price action at the beginning of the week before the earnings reports really started to weigh. And that really coming off the back of that Mary Daly comment, San Francisco Fed President Mary Daly, who said that now's the time to start thinking about dialing back on interest rate hikes. So that's really going to be the story of the week ahead, because we've just had some inflation figures out of the US. We've had the GDP numbers, which were a bit better than expected. We had the ECB hiking rates. We had the Bank of Canada blinking and going for a slightly softer interest rate hike than had been expected. So in this week, it's the Reserve Bank of Australia expected to do 25 basis points. So it could go to 50. Analysts, economists are split over which way it's going to go. Likewise, Bank of England, expectations have come back down somewhat since the mini budget, when there had been something like 200 basis points worth of hikes being priced in by November. Now that's down to about 75 to 100. Even smaller 50 basis point hike could be on the cards with the new fiscal arrangements, the new Chancellor and the new Prime Minister ripping up that mini budget completely. So the Bank of England might not need to go for the 75 basis point, but we're not sure. It was a three-way split at the last meeting, so there's definitely not all that much consensus, but we could see something in the region of 75 basis points. And then on Wednesday, it's the Federal Reserve. It's nailed on certainty that it goes for 75 basis points. The key question really is the future. Do we get that pivot? Do we get the pivot language? BlackRock apparently has been telling its financial advisors that that's what it expects at this meeting. And by pivot, we mean starting to ease off the gas in terms of hiking and starting to tee up a more slower approach to raising rates. So dialing them down and not going for 75 basis points, but going for smaller hikes and then ultimately pausing. At the moment, we think probably goes to 50 in December, 25 in February, and then pauses at 4.75%. That's what the Fed thinks it's going to be doing. I think probably it needs to go a lot higher, but we'll see. That is up for debate. But certainly look out for pivot language at the Fed meeting on Wednesday, RBA day before, Bank of England the day after, and we've still got earnings season, but the big beasts are out of the way. That's it for now. Thanks for watching.